Hey, this is Matt from InvestiQuant. Today is Monday, March 1st, 2021, and today is the first trading day of the month. We looked at a study based upon the first trading day of the month earlier today that showed a nice bias to the upside. That is playing out as we are sitting at the highs of the session as we approach the end of the day. So what I want to do this afternoon is look at what has happened historically as we approach the close on this first trading day of the month when we are seeing similar type of action. So let me hop into Discover and we will run this study real quick here. In all four instruments, the setup is going to be based upon entering the market long at 3 p.m. Eastern Time, exiting at the close, which is 4:15 p.m. Eastern Time. Now for the opening filter, we gapped up this morning. I'm going to keep it simple and just use gap up for the opening filter. Gap direction, gap up, got that. Next, I'm going to go into the post-open filters and add some price action that has happened since we opened. So we gapped up and took off to the upside this morning immediately. So I'm going to say that the gap is not filled. That means we did not retrace back to Friday's closing price. And then I'm also going to say we are trading in the top quarter of the intraday range. We're trading up right near the high. So I'm going to go down to this intraday close versus intraday range category, and I'm going to hit equals next to close and top 25% of intraday range. And that means at 3 p.m., since that's the time of the entry, that it is trading in the top 25% of the intraday range. And we will find out if that's true at 3 o'clock. We don't know yet, but currently that is true. All right, next I'm going to go into the indicator section. And since this is a seasonality study based upon one day a month that happens, the first trading day of the month, I'm going to just go with a 200-day simple moving average. That way we can keep a few more samples in there. So I'm going to say we are above a 200-day simple moving average. And then lastly, in the calendar library, I'm going to say today is the first trading day of the month, and then click view results. And here we go. These are the results of going long at 3 p.m. Eastern Time, exiting at the close, 4:15 p.m. Eastern Time, when it is the first trading day of the month. And on that day, you gapped up. You did not retrace to the prior day close. And at 3 p.m., you are trading in the top 25% of the intraday range. So that's a strong scenario that is unfolding to the upside. This has taken place above a 200-day simple moving average. Now, historically, we've got 31 samples in the S&P, 31 in the NASDAQ, 28 in the Dow, and 29 in the Russell. So very similar sample sizes, right around 30 samples each. And the win rates are kind of all over the place. So you've got the S&P very neutral here at 48%. The NASDAQ's the weakest at 32%. The Dow, 39%, and the Russell, the strongest at 62%. And that percentage is telling you what percentage of these have closed above that 3 p.m. entry price. If we look at the average win to average loss on these, the average loss is a little bit larger there in the S&P. The average win is larger in the NASDAQ. They're pretty similar in size for the Dow, and they're pretty similar in size for the Russell. So there's not really much to learn there from the average win to average loss, since they're kind of all over the place, and the win rates are kind of the same as well. So not seeing consensus on this for one way or the other. The S&P is pretty neutral, so not a real strong bias into the close either way from here. So hopefully you found that helpful. Good luck the rest of the day, and we will see you tomorrow.